The stock market, it's this world of immense opportunity. But let's be honest, for most people, it feels like a puzzle you just can't solve. The wisdom of the greats seems locked away in these dense, complicated books. But what if we could just distill all of that down into a clear, simple playbook? Well, that's exactly what we're going to do right now.
So, this quote, it's from a classic book written way back in 1841, and it just nails the single biggest challenge in investing. It's not about some secret formula, It's about fighting our own human nature. And get this, the exact same herd mentality that drove the tulip bubble centuries ago, it's at play in the market every single day.
I mean, the idea is simple enough, right? Buy low, sell high. So why is it so dang hard to actually do? Why do so many smart, hardworking people end up losing money in the market? That's the big question we're going to tackle as we follow the journey of an investor, from a total rookie to a real pro.
Okay, so every single investor starts out in the exact same spot. And it's a really dangerous one. It's a place that promises quick riches. But in reality, it's just filled with all these psychological traps. Let's dig into the first one, the great trap that gets almost everyone.
Let's just call our beginner the new trader. The new trader's decisions are run by this powerful and, frankly, toxic trio of emotions. Greed gets them to pile into some hot stock right at the very peak. Fear makes them panic sell at the absolute bottom. And hope? Oh, hope. It keeps them holding on to a loser, just praying it'll come back. See, they're not following a plan. They're just reacting to the noise and their own emotions.
So, how do you break out of that trap? How does our new trader become a professional? Well, the masters, guys like William O'Neill and Jack Schwager, they've shown us that real success isn't built on one secret trick. It's built on three super important pillars. And honestly, the first one, it's probably not what you're thinking.
All right, so this first pillar, it's got nothing to do with fancy charts or company balance sheets. It's all internal. Before you can even think about mastering the market, you first have to master your own mind. The biggest battle you'll ever fight in investing is the one happening right between your ears.
And here you can see the huge difference in how they think. The amateur, our new trader, their ego is completely tied up in every single trade. Being right feels more important than making money. They're on top of the world when they win and totally crushed when they lose. The professional, though, they operate from a plan. They're detached. A loss isn't some personal failure. It's just a business expense. It's part of the game. And this is where the rubber meets the road, As Jack Schwager points out, fear is directly linked to how much money you're risking. If you bet way too much on one trade, your primal brain just takes over. Your decisions stop being rational. They're driven by pure panic. A pro controls this by controlling how much they bet, making sure no single trade can ever hijack their emotions. So, once you've got your head screwed on straight, you're ready for pillar number 2. This is where we shift from the inner game to the outer game. It's all about developing a real solid strategy that gives you a repeatable advantage, an edge in the market.
So what in the world is an edge anyway? Well, it's just a method you use to analyze the market that over time has a high probability of working out. It's not about being right every single time. That's impossible. It's about having a system that, over dozens or hundreds of trades, makes you money.
Think of it like this. There are two main highways you can take to find your edge. Fundamental analysis is like being a detective. You're digging through financial reports, checking earnings, and figuring out what a company is really worth. Technical analysis is more like being a market psychologist. You're studying charts and trading volume to figure out what the crowd is thinking. And look, the big secret here isn't about which one is better. It's about picking one and sticking to it with crazy discipline.
Okay, let's look at a real tool here, the PE ratio. If a stock costs $100 and the company makes $5 per share in profit, that's a PE of 20. Simple. It tells you that investors are willing to pay $20 for every $1 of that company's earnings. Now, some people see a high PE and run away. But masters like William O'Neill actually found that the biggest winners often start with high PEs because it signals that massive growth is expected.
Now for the other side of the coin. Technicians kind of believe that all that human psychology, fear and greed, it actually creates patterns you can see on a stock chart. Head and shoulders top, for instance, is this classic pattern that can warn you that a big trend is about to flip from going up to going down.
By spotting these patterns, traders try to get out ahead of the crowd.
All right, so you've got your mindset locked in, you've found your edge, you'd think you're all set, right? Well, there's one more pillar. And honestly, without this one, the other two are completely useless. This is the thing that separates the pros who last for decades from the ones who have one good year and then just disappear.
This pillar is all about one thing: risk management. And I know, it doesn't sound sexy, but trust me, this is the bedrock of success. It's the art of simply staying in the game long enough for your edge to actually have a chance to work. So how do they do it? I'm going to say that again, because it's so important. The most important rule in this entire game is not about picking winners. Everyone is obsessed with finding the next big thing, right? The stock that's going to go up 10 times. But the real pros, they're obsessed with something else entirely.
This one number? It tells the whole story. The legendary investor William O'Neill, he studied all the greatest stocks in history, and his number one rule was this: you cut every single loss at 8% below what you paid for it. No questions, no hoping, no exceptions. The whole point is to protect your money. See, a small loss is easy to make back. A huge catastrophic loss can knock you out of the game for good.
And this rule is just one part of a bigger system, right? Professionals almost never risk more than 1 or 2% of their entire account on any one trade. That way, even a whole string of losses can't wipe them out. And they also know exactly where they're getting out, for a loss or a profit, before they even click the buy button. The whole trade is planned out ahead of time.
Okay, so let's tie this all together, shall we? When you build on these 3 pillars, that emotional, reactive new trader, well, they transform into a professional who has a complete working playbook. So let's just run through that core framework one more time. First, you master your mind, you get your emotions under control. Second, you find your edge. That's your repeatable strategy for finding good opportunities. And third, you survive to win by being relentless about managing your risk. Mindset, method, money management. That's it. That's the playbook.
Look, all this wisdom, it's out there for us. It's in books like this one from William O'Neill. The greats have literally given us the map. They've shown us the path. But here's the catch. Just reading the map isn't enough. You have to actually do the work. You have to walk that path with discipline, day after day.
There's this great quote that the legendary investor Philip Fisher just loved. It speaks to this idea that, yeah, these huge opportunities, they really do show up in the market. These tides of fortune, they come. But those tides, they only lift the boats that are actually ready for them, the ones captained by someone who has a map and the discipline to follow it.
And so, now it all comes down to you. The playbook is right here, in your hands. It's simple, but it is not easy. It takes discipline, patience, and a whole lot of humility. The difference between winning and losing isn't knowing what you should do, it's actually doing it, especially when it's hard. The only question left is, will you follow it?